Hi, in this session, we'll talk about the treatment of interest on borrowings to acquire a tangible asset. So, to acquire a tangible asset, that is a property, plant, or equipment, a company may end up borrowing capital for that. So, the question is whether the interest paid on that capital borrowed to acquire the tangible asset, whether that interest becomes part of the cost of the asset, that is, whether it gets capitalized, or whether it is treated as an expense in the income statement. So that depends on whether the borrowed capital is used for purchasing the asset or for constructing the asset. So when the asset is purchased, then the interest on this borrowed capital will be treated as an expense and it will be debited in the income statement. And the reason is, when we are purchasing an asset, the asset is actually ready for use. So any interest paid related to the purchase, we don't consider it as a part of the asset's cost because it's not really required to put that asset to use. On the contrary, if we are constructing the asset, we'll utilize that funds to proceed with the construction, and hence, since the asset is not ready for use until construction is over, the interest expense during construction will be treated as will also be capitalized. Okay, and this will be added to the value of the asset and it will reflect in the balance sheet. So now the question is, do we capitalize the entire interest on the borrowed amount or is it something different? So let's just understand this through this example given here, where ABC borrows 300,000 on 1st of January 2024 at 10%, and this is for financing the construction of its building. And out of this, 200,000 is spent for construction on 1st of January 2024. If we look at this on a timeline from Jan to December, the actual amount borrowed is 300,000, for which ABC will have to pay interest of 30,000 for 2024 because it's borrowed in the beginning of the year. But actually they are using only 200,000 for construction purpose, right? And that's also at the beginning of the year. So they will be capitalizing only 20,000, which is the lower of the actual interest paid, or the interest on 200,000, which we also call as weighted average accumulated amount, or WAAE. Now we'll see this a bit more in detail. So one point to add is the difference between the actual interest paid to the bank, which is 30,000, and the interest that we are capitalizing. That is, out of 30,000, we are considering 20,000 as part of the cost of the building, right? We are capitalizing. But there is a difference between these two, which is 10,000, and that will be treated as an expense and it will reflect in the income statement. So now let's say out of the 300,000 borrowed, 200,000 was spent for construction on 1st of April, in which case remaining number of months for the year is 9. So the weighted average accumulated amount on which the interest for capitalization has to be calculated will be based on these 9 months and not the entire year. So we consider the amount of expenditure, which is 200,000 for 9 months, right? So it was paid on 1st of April, so we have remaining 9 months. So we will capitalize only for the remaining 9 months. So 200,000 multiplied by 9 by 12. This is the weighted average accumulated expense, and 10% of that, which is 15,000, is what will be capitalized, because it is the lower of the actual interest, 30,000, or interest on the weighted average accumulated expense, which is 15,000. So the lower of this is 15,000, which will be capitalized for the year 2024. Let's say on 1st of April 200,000 was spent, and on 1st of October another 100,000 was spent for construction. So the way we calculate weighted average accumulated expense here is, on the first 200,000 we calculate for 9 months, so 200 into 9 by 12, and for the remaining 100,000 we calculate for the 3 months, remaining 3 months, so 100,000 into 3 by 12, and each of this multiplied by 10% will be a total of 17,500. That's the interest on weighted average accumulated expense, and this is the amount that will be capitalized, as this is lower than the actual interest of 30,000. So in the previous scenario, the construction expense was incurred on specific dates, like 1st of April, 1st of October. So we took the remaining months in the construction period for that year as to calculate the weighted average accumulated amount. But in the scenario given here, it says 200,000 is spent for construction uniformly between March to December, which means we don't know exactly how much of this 200,000 was incurred in each of this month, but in each of these months, but it just says between March and December 200,000 has been spent, but the allocation we are not sure. So there are two approaches in which this can be handled. First is a very precise approach where we split this 200,000 across 10 months equally. So 200,000 divided by 10, we assume that for each of the remaining months starting from March through December, 20,000 per month is spent. So for each of these months, we have the number of months for which interest is paid, which is the remaining months. So for March, we have remaining 10 months. Similarly, April 9, May 8. And based on this, we calculate the weighted average accumulated expense for each of this. So 20,000 into 10 by 12 is 16,667. 20,000 into 9 by 12 is 15,000. 20,000 into 8 by 12 is 13,333, and so on. Now, having calculated the weighted average accumulated expense, next we'll calculate the interest on weighted average accumulated expense at 10%. So 16,667 multiplied by 10% is 6,667. So we calculate this, and the total weighted average accumulated expense is 91,667, and the interest to be capitalized is 9,167, which is the lower of 30,000, or interest on weighted average accumulated expense, which is 9,167. Now this method requires a lot of calculations. So if we want to avoid this, we can have a more simplified approach. So in the simplified approach, what we assume is the expense of 200,000 that is uniformly spent between 1st of March and December. We assume that that is incurred somewhere in between, that is between March and December. So we take the average. So there are 10 months, we take the average of that. So the assumption is that it was incurred somewhere around the 5th month after March. So going by this, we calculate the weighted average accumulated expense, which is 200,000 multiplied by 5 divided by 12 months in that year, which amounts to $83,333. And interest on weighted average accumulated expenses, 10% of that, which is 8,333. So it depends on which approach we are taking. If we take the precise approach, as we calculated earlier, we will capitalize 9,167 because the actual interest incurred is 30, and as per the precise approach, interest on weighted average accumulated expense is 9,167, so we take the lower amount. In case we adopt the simplified approach, we will capitalize 8,333. Let's now see the journal entries for capitalization and expensing. So if you have adopted the precise approach, we said that 9,167 is what will be capitalized. So for capitalization, we are adding this to the cost of the asset, right? It attached to the value of the asset. So we'll debit the asset, that is the building, and we'll credit interest payable or cash, as the case may be. Now the remaining, that is the actual interest paid to the bank, which is 30,000 minus the interest that we are going to capitalize, which is 9,167. The difference is 20,833. This will be treated as an interest expense and it will reflect in the income statement. So we debit interest expense 20,833 and we'll credit interest payable or cash, as the case may be. So some of the important points to be kept in mind are interest can be capitalized only if the amount borrowed is for construction purpose and not for purchase. And the interest paid during the period of construction is only allowed to be capitalized. So if the interest is incurred before commencement of construction or after the construction is over, the interest for that period will actually be expensed. And if the amount borrowed is more than the construction cost, we will calculate interest on the construction cost, and that is what will be capitalized, not on the amount borrowed. So that's why we are taking the lower of the actual interest or interest on the weighted average accumulated expense. And if there are any intentional delays in the construction, we cannot capitalize the interest incurred during that period. So when it comes to calculation of weighted average accumulated expense, if the amount of expense incurred is on a specific date, we will take the remaining months in the construction period and calculate. In case the amount of expense is uniformly incurred across a period, we can either use the precise approach where we will divide the amount equally across those months and calculate, or we can take the average of the months and calculate the weighted average accumulated expense. Hope this session gave you an understanding of how to capitalize interest incurred on borrowings for acquiring tangible assets. Thanks for watching.